All right. Today, I got an email from a client from the lawyers asking me to represent the seller. They're buying a property if they're supposed to be FIRPTA withholding. And I basically did a little research and explained to them that on the circumstances, they do not have to do withholding. My client, the buyer, could buy the property and not do FIRPTA withholding. FIRPTA withholding basically is you have to withhold from the sale because the owner of the property is foreign, and because the IRS doesn't know if they're ever going to get any money from that capital gain, if there was any, they require withholding. Now, what do you do if you want to not pay withholding? So, how do you avoid FIRPTA taxes? You can, and let's say you own it in an LLC, you can elect or check the box and make that LLC into a C Corp. C Corps, by definition, do not have to do withholding. The concept basically is simple. IRS doesn't care to do withholding because it's owned by an S Corp or C Corp. It has to be a C Corp because a foreigner can only own a C Corp. So they're going to get taxed. IRS will get their money so they don't have to do withholding. So that's why that works. So sometimes that's a little easier for the foreign owner because sometimes that whole FIRPTA withholding, it's a whole mess to get the money to get it back if you maybe you didn't have a gain because they tax it on the gross. The withholding is based on the gross withholding. That's what FIRPTA is. So if it's $1 million, 15%, that's a lot, but maybe there is no gain. Maybe the customer, the foreign owner paid 1 million, so then now they're having all this money held up in the system for nothing, and then they got to file a 1040 NR to get that money back. It's a whole mess. So everyone loves to get out of FIRPTA. So they do this thing called a checked box election, and that is the hack. There's a whole thing to do when you're doing that for the FIRPTA to get the non-recognition treatment. There's a lot of the seller needs to set this up and timely because it takes time to get approved. So if you're going to sell your house as a foreign owner and it's an LLC and you want it to be that C Corp, go ahead and make sure you do it timely because if you're going to sell in a month, if it's not all done right, then you're not going to be able to get out of withholding because you didn't get approved yet from the IRS to be a C Corp. So you have to have some little bit of foresight to see what you're going to be doing, and that is all that you have to do with that. Just as a thing to understand that now you have a C Corp. You pay the taxes. Let's say there's a gain, you pay the taxes, 21%. And it just like any other C Corp, you can't take that money out unless it's going to be withheld or if it's a liquidating dividend. So this foreign person has to have an idea that if they're selling and then they're completely dissolving the whole C Corp, then it's fine. You can take the dividends out tax free as a liquidating dividend. But if you have multiple properties into the C Corp already or whatever, it's very bad because you can't do it without taking dividends out, and then there's withholding on dividends. So be careful on that. But if it's just a one property deal and you want to get out of that withholding and you only want to pay taxes on what you actually will owe, which is your net gain, then you go ahead and do this timely before the sale, get it all worked out, and you should be good to go. And you basically did a hack. Now, a little bit of history. 21% is what the C Corp rate is, so it's pretty good, pretty close to what you would pay the other way as just an individual. But 2018, before that, the tax rate on a C Corp was 35%. So doing this hack was not really a hack because you ended up paying more in taxes. So it's really a new thing since then. And if Trump makes the tax rate even lower, it could be even better. I'm not sure if what's going to happen there if it's applicable to foreign owners. But that's really all. So this has happened today. I like talking about things that happen within my firm on a daily basis. So that's very important. And a lot of lawyers, unfortunately, are uneducated in this. And sometimes they always think you got to do withholding, you got to do withholding. But then the seller is trying to say, no, I did this whole FIRPTA check the box election, and I don't need to do withholding. So I'm sort of educating lawyers that sometimes have a hard time with this. Um, and of course, do a W-9 form, have the seller fill that out to make sure, under perjury that it's a C-Corp. And that's really all I have to say about that. If you need more tax strategies, accurate strategies, follow, like, subscribe. Have a great day.